Hello my people, so today we're going to go through episode 2 of the opening range model, and I want to take you through today this trade that I took on the Wednesday of NFP. So starting off, we'll start on the higher time frames, and I want to give some explanations on the opening range gap and why they remained unfilled, and we actually technically didn't use it for this model, but we used the narrative of it for this model. So I know that's a bit confusing, but I'll get into that. Then in the end we will take you through the lower time frames and the entry using the first presented fair value gap. Here I have marked out how many handles the opening range gap was from the previous day's close to 9:30 open. We have Monday to Tuesday being 233.75 handles, and Tuesday to Wednesday being 233.75 handles. Now we have a rule with these when we are in a trending environment, especially like this, going just higher and higher and higher, and we have gaps that open with larger than 150 handles. We treat these as breakaway gaps and don't expect them to be revisited, as opposed to when they are under 150 handles and there is a 70% likelihood for it to reach the midpoint within the first hour of trading from 9:30 to 10:30. But you might be wondering, well, if these opening range gaps never got retraded back into, how is this the opening range gap model? How does this have any substance to what your trade was? Well, because this gives me narrative. Yes, we can use the opening range gaps as POIs, points of interest, and DOLs, draws on liquidity, but we can also use them in narrative purposes like this, where this is telling me, okay, I expect a fast rally higher, I don't expect much of a retracement, and I don't want to see price come into these levels. Okay, so even though I didn't use this gap for my trade in terms of draw on liquidity or point of interest, I did, however, use it for narrative purposes. Now, if we just drop here and go strictly on the 1 hour time frame now, on the electronic trading hours, and taking away that regular trading hour box, we can just see simply that we are identifying bullish order flow. Okay, we're making new highs consistently with higher lows. Market structure is clearly bullish. Order flow is being respected. We see this gap here being respected and sending price higher. We see a new gap being created, and here at 7 o'clock we expect to drop down into this gap to send price higher. We had employment news at 8:30, which was a catalyst to use for manipulation to send price into this fair value gap. So now when we drop onto the lower time frame, the 1 minute, we can see that we had 8:15 news here, and since then we've been dropping off lower, and then at 9:30, when we are inside of this higher time frame gap, we have time meeting price, and we create a very quick and sudden low of the session, and then the very next candle shifts above this order block, and we see the following candle and the next candle after it create a fair value gap, which is the first presented fair value gap of the morning session. So shifting above this order block is the change in the state of delivery, and then when we have this first presented fair value gap created, we can trust that this is going to hold, as we are bullish and this is already been traded above. We've got the change in state of delivery and this has been created, so we expected to use it as support, and we can take our entries from this first presented fair value gap. As we can see, it's just constantly chopped around but continuously revisited this first presented fair value gap, wicking away from it, and then here we came down into as low as the 9:30 order block, which is the first presented PD array of the session, and swept this liquidity and then started trading higher. Now obviously I took my entry from here and I had my stop loss down here below this order block, but once we swept this liquidity here and we traded higher, I took another entry and I trailed my stop loss to here. We retraced again with a deep retracement back to the first presented fair value gap, and then after 10:30 we just started expanding higher and higher. I took my first partial at a premium array on the higher time frames. So if we go up to the 15-minute, I will show you that quickly. That is this old fair value gap, because if this is my target and this is my inception point, if we put a Fibonacci over this and measure equilibrium above it, we would have a premium, which is where I want to look to sell, and this was the most prominent PD array in a premium for me, so that's where I took my first partial. At this point, when I took my first partial, I had rolled my stop up to break even, and I was asleep through all this, and I just set my target to here, the 7 a.m. high, which was the high of the day. But obviously this round figure of 28700 was my terminus, but because I was asleep, I just held it to here. So this trade, using this very simple model, netted me about 200 handles today, which was absolutely amazing, all just with this very simple ideology. Okay, so anyway, that is all for today. I just wanted to show you different ways and different variations of using the same components of this model, and how you can catch big runners like this and just show off my trade a little bit. So I hope you found value in this, and I'll speak to you guys in the next episode. Ciao.